Hello and welcome to Investing Confidential. Well, if you've been watching my videos, the few of you that have, none of this is shocking, right? The U.S. market weak. We got inflation probably going higher. Another raise probably coming. We got China muddling through a real economic disaster. U.S. debt spiking, but yet the U.S. dollar is strong because the rest of the world's a mess. This is a buying opportunity for commodities. I'll discuss that later. And finally, at the end, I'm going to talk about why or why not you should be buying EV cars. But let's talk about the U.S., a real mess, confirmed by all these numbers. I mean, remember, good news is bad news, folks, okay? We had some consumer numbers come out. The numbers tell the story, but they don't tell the story. They tell you good news, but it's really bad news. So let's look at these consumer numbers. So here we see personal consumption. You know, all the talking heads are jumping on it. Positive, positive, positive. Yeah. It's not By the way, folks, I got to tell you, all these numbers coming out of the U.S. I never thought I'd say this before, but this is a disgrace. Every number that comes out, whether it's GDP, home sales by these agencies, the Bureau of Labor Statistics, they get revised down. Okay, they come out with a number, and then a month later they come out with another number, and they revise down the number before by 80% or 60. I mean, it's a disgrace. Okay, none of these. I mean, I used to say it about China. You can't believe any numbers. In the U.S., folks, you cannot trade on these numbers. You cannot trade. You have to look beyond the numbers. So let's look beyond this fake number, because this is a fake number. The consumer is not spending money like crazy. Okay, here's some proof. Look, here we have disposable income in real terms, adjusted by inflation. The big spike in the middle, that's COVID. Okay, obviously been going up, but so we've seen a total reversal. Okay, and this is government spending. We're going to see we're going to start trending lower on disposable income because people don't have disposable income. Okay, anything they have is credit. Okay, here's another proof. Look, personal savings, negative. Okay, so your personal savings is negative. How is spending going up? Credit cards, folks. Okay, credit cards. Unfortunately, people don't learn lessons. I hope you guys listening to me will learn a lesson here. Don't not use credit cards. Okay, $1 trillion in credit card balances. This is why we have artificial consumer numbers. And then government spending. I showed you previous video. The GDP was all government spending. Okay, that's not how you want to run an economy. It's a mess. Okay, an absolute mess. And the jobs are vanishing, folks. Look at the numbers. Okay, you got jobs vanishing, and then you got workers. They are being forced to go back to the office. Many are still remote in different locations. And they need to sell their homes because they went out and they left LA, New York, all these cities, and they went out and bought vacation homes. I'm going to work from home for the rest of my life, whatever. No. Now you got to come back to work. You get fired, or you get your pay cut by 50%. Okay, Austin, Texas. It was an interesting article not too long ago. Look it up. They're all looking to get out. All these Californians, they went to Austin. Okay, the real estate market there is very weak, 25-30% lower. You went there as a California, you bought a house, you're trying to sell it now, 30%, no bid, lower. Okay, then you have all these people that were living in the Hamptons and all vacation spots in Nantucket, paying big money for these houses. No bids. Okay, no bids. And you could do that when your stock prices are going up, you feel good about yourself. But when stocks come down, it's a double whammy. Okay, this is happening all over the country. Okay, GDP, folks, is going to continue to struggle. Government's going to spend tons of money. It's not going to help. It's not going to help. Massive government spending is not. We've had that going back to the great financial crisis. GDP is still averaging below 2% during this time when we just threw the helicopter money. Ben Bernanke, that fool, that real fool, that people still think the guy's a joke. Nothing worked. His helicopter money didn't work. Sure, they say it prevented whatever, but those don't growth because the politicians don't care, folks. They print money like a printing press. And here you see debt to GDP. Okay, this is a disaster. We are at a level. We are right now at levels above World War II. Debt to GDP. Not okay. So this is an adjusted number. Debt to our GDP. Keep saying that over and over again. Why was it so big in World War II? Well, we had to ramp up. We had to spend money to ramp up the war machine. Okay, are we at war? No, not even close. Forget about Ukraine. That's another joke. But here we are spending money like it's going out of style. And this is not just the Biden administration. This has been going on since the financial crisis, as you can see here. But now it's at danger levels. And if it continues, we're going to be like Brazil or Argentina, Venezuela, African nations, just indebted nations, Southeast Asia, indebted nations. This is where we're headed. This is why people sound the alarm. Everyone laughs. No. Look at these numbers. They're shocking. You should be shocked. Okay? And this is why the 2-year bond is where it is. Okay, what is it? What is bond market is a reflection of a couple of things: interest rates, but also the credit worthiness. We just had our debt downgraded. And so you got two-year bonds above 5%. That's where my money is, folks. It's in short-term paper, not the stock market. I'm going to compound at 5% for the next 2 years. Bottom line. Okay, and these yields are going to continue to stay higher. I've been saying it all along. And nothing has changed. Eventually, it's going to change, but right now, nothing has changed. And yet, there's some incredible things going on. The U.S. dollar has been very strong. Okay, strangely so, because the rest of the world's a mess. China's a mess, Europe's a mess, et cetera, et cetera. So the U.S. dollar has been very strong. But that's not going to hold. And usually, when the U.S. dollar is strong, your commodities going down. No, they're not. They're going higher. Okay, and China is not bailing out the world like it used to. In fact, China is such a mess. And here's proof of what I'm talking about. China's a mess economically. And here, look at iron ore prices. Okay, iron ore prices have always reflected Chinese growth and economics. So recently, you have a spike in iron ore prices. It makes no sense. You got a weak China, but yet it does make sense because iron ore prices are in dollars. It's a commodity and in dollars. The U.S. dollar, even though in the short term is inherently weak, and this is anticipation of the U.S. dollar collapse over time. Okay, unheard of. Okay, let's go back to China here. China's given up spending, folks. As you can see here, they're no longer throwing money away. Okay, I don't respect the Chinese government. I think Chairman Xi, as I told you, this guy, Xi Jinping, this guy's a joke. He's dead man walking. But China thinks long term, over time. They're done. Okay, they're done throwing money away, because they've thrown billions away, billions, and it's not helping. But there is signs, by the way, that their incentives for real estate is having an effect. So watch China. Very interesting. Watch for stabilization. Okay, but China's biggest problem is not their economy. It's not any of this stuff. Okay, China's biggest problem is pollution, food and water. And here you can see, and by the way, if you've been, again, listening to me, I've been talking about this for a long time. Only 20% of the water that China has is drinkable. The rest of it is, they have plenty of water. This doesn't really, see, this doesn't tell you the whole story. China has low water shortages because most of the water is polluted, undrinkable, completely undrinkable. So China's got many problems, but this is their biggest problem because this can cause social unrest. And finally, two things that are all related to China. The first is Apple. Look, guys, Apple's a great company. I own an iPhone. I have a Mac. I have an iPad. I love the products. but the valuations, and I've been seeing it for a while, were ridiculous. Also, Apple's been massaging their numbers. It's obvious now, but everything's now coming back to earth. Okay, for 2 years, they've been massively massaging numbers because the bottom line is, folks, the iPhone is not selling. There's no demand. There's no innovation. So it's not selling. They're good phones. And if you have one, why keep, let's keep it. There's no reason to turn it in because there's no innovation. Okay, so as you see here, Apple stock has broken the uptrend. Okay, and it's going to be broken for a while. This latest spike when it hit over 3 trillion in market cap, I mean, this is not going to continue, especially when their core product continues to decline. Now they're going to blame everything on China, and they should, but they blame it on themselves because, again, they have not innovated since Steve Jobs passed away. Okay, Tim Cook, good manager, you're not an innovator. He's the last thing Apple needs right now. Okay, so Apple stock's not going to collapse overnight, but it's going to continue to step lower until it reaches a more reasonable valuation. Where that is, nobody really knows, folks. It's got to be 20, 30, 40% lower before it gets to be cheap. Will it ever get cheap? I don't know. Okay, and now, final thing about China related is EVs. I'm sorry, folks, I spoke about EVs. As you know my opinion if you've listened to videos. EVs were never a solution for climate, ever. Okay, that's a scam. Okay, and China played into that, and China got scammed too. Okay, China went, as I told you, they had 190 car companies. We have about 10. They produced EVs like they were going out of style. Now they're paying the price. What are they doing? They're dumping the EVs to Africa. They're dumping them into Europe, and then they're dumping them in as you can see here, in the fields. Okay, many of these car companies, 80% will go under over the next 2 years, which is a big problem for China because they employ a lot of people. This is a mess, a big mess. And now Tesla, okay, Tesla had decent sales. Who's buying all these Tesla cars? Guess what? I know who's buying them, the rental company. I told you guys the story. I've rented a couple Teslas. I've driven her around quite a bit. Great cars to drive, probably the most fun car I've ever driven, but they're not practical. Miles per gallon, not including money, just miles per gallon on a full tank, I calculate to be about 3 miles per gallon, driving local. Driving fast, but driving local. And when you rent one of these, okay, if somebody rents one they've never driven before, a lot of people, oh, I could drive an EV car. Ask someone who's rented from Hertz a rental car recently. By the way, they've given these things away. Massive incentives. But nobody wants them after the first drive. Nobody wants them. You drive it once on a rental, and I don't want to rent it again. It's a pain in the ass to charge. You press on the thing and it drains the battery. I mean, they're fun to drive, like I said. But if you ever watch on a highway, Teslas, they drive real slow. Most people who own them drive real slow because they realize you can't drive them like you should drive them because they're fast cars. But the politicians, folks, are clueless. Absolutely clueless. Incentives, all of this for EV cars, they're not the solution. They don't solve any climate solution. The auto companies in this country are absolutely screwed. They're going to lose billions. I wouldn't touch an auto stock if you paid me. Stay away from them. Okay? They all jumped into this EV and they're all going to be eating them or selling them at a loss. It's the bottom line. Okay? So finally, China's a mess, but watch it. It may stabilize very soon. Brazil is in great shape here. I hate to say it. I don't like the president, but look, the central bank is in control. Thank goodness. They had rates up there. They're bringing rates down, which is helping the economy. And again, Brazil is a commodity engine. You need to own commodities. Brazil is a perfect way to own commodities. And finally, I'm just going to say, watch gold. It's holding really well at these levels. Okay, watch for buy gold on the breakout. Okay, you have a chance with the strong dollar in the short term, but like I said, the dollar is going to turn lower. That's when gold is going to spike. So, all you investors out there, Be careful out there.